Do you want to learn the best investment strategy for long-term investment growth? Then, welcome to the Impact Podcast with Taiwo Balogun. If you are new to this channel, I want to beg you to please subscribe to this channel. And if you are a returning subscriber, I appreciate you for your time and also for consuming our content. I appreciate you so much from the depth of my heart. Then, I also want you to know that if you are new on this channel, I am your guide to entrepreneurial tips, startup strategies, smart investing, and financial freedom tips. I am your go-to. So you are on the right channel. If you are new on this channel, you are on the right channel. However, in today's episode of the Impact Podcast with Taiwo Balogun, I am super excited to share with you the best investment strategy for long-term investment growth. So I want to encourage you, grab your coffee, get comfortable, and let's dive in. So, investing for a long term can be challenging. We know that, and I'm sure that you know that investing for a long term can be very, very challenging. In fact, it could be frustrating at times. But it doesn't have to be. You know why? The strategy that I'm about to reveal has been a game changer for me and many of my coaching clients, and it can also be a game changer for you if you will stay tuned to the end of this video. I am super sure of what I'm going to share with you. Are you ready? If you are ready, drop in the comment section that I am ready. Yes, I am what? I am ready. So let's go. It's all about, investment. I used to tell some of my coaching clients that investment is all about being disciplined, and know when to diversify your portfolio. You understand? Know when to diversify your portfolio. I mean your investment portfolio. So let's break down the strategies in this video. And the first strategy that I'd like to share with you is diversification as an investment strategy. Diversification as what? An investment strategy. I want to encourage you to always think of your investment like a watermelon. What did I say? Watermelon. You know how big some watermelon could be? Yes. Now, at times, we don't want all our watermelon slices to be the same, and there's no way you can cut your watermelon that you will get the same size. No, you can't get the same size. You understand? You cannot get the same size. So by diversifying your investment portfolio, you are spreading out your risk across different assets. And when I say different assets, I mean assets like stocks, FGM bonds. In one of my videos, I shared where you can invest in during inflation. So if you missed that video or you want to watch that video, there's a link up here. You can click that link and you have access to the video. Check the link. So different assets that I'm talking about that you can diversify your investment are stocks, federal government savings bonds, and also treasury bills. We also have real estate and even commodities. Now, I don't know why this is not trending. Maybe you don't know. Maybe you don't know that the Nigeria mining sector is at the beginning of booming. So this is the best time to position yourself to tap into the gold, silver, and commodity mining in Nigeria. Even agricultural commodities are very good investment portfolio that you can diversify your investment. Now, for instance, let's say you have 50% of your investment in stocks. You can have 30% of your investment in FGN savings bonds and then 10% in real estate, while you can keep the remaining 10% in both, solid minerals and agricultural commodities. Don't go far. You can get all this done in Nigeria. No matter what is happening to our economy, you can diversify your portfolio. And I'm going to share with you why you should diversify your portfolio. There is no way you will be frustrated diversifying your portfolio. You can't be frustrated if you understand the strategy, the diversification strategy that I am sharing with you. This way, if one sector is underperforming, the other sectors can balance out. That is one of the reasons why it's like having multiple safety net. You understand that? So if you are still wondering where you can invest some of your earnings, well, I have a video that will guide you up here where you can invest, and you can watch this video immediately after this one. The next investment strategy for long-term investment growth is compounding. The principle of compounding your investment returns. What did I say? The principle of compounding. This is where the magic happens. A lot of people don't know that this is where the magic happens. Compounding is earning returns on both your initial investment and the returns it generates over time. Should I say that again? Compounding is earning returns on your initial investment and the returns it generates over time. The earlier you start, the more powerful compounding becomes. If you start now, before you know, within the next 5 years, 10 years, you would have built your portfolio to a level that you can say, yes, I have financial freedom. It's like a snowball effect. It could be small at first, but growing larger and faster as time goes on. Finally, we have asset allocation as the last but not the least strategy that I'd like to share with you in this video. What is asset allocation? This is about adjusting your investment based on your risk tolerance and time horizon. And time what? Time horizon. Yes, your risk tolerance is very, very important in allocating your assets. Younger investors might go for, higher percentage in stocks. Since they are young, they still have more time to ride on the market. But the older investors might prefer more bonds. I mean, more of the FGM bonds to preserve their capital. We are in a fragile economy where anything can happen. Any government can come anytime and change the policy. But one thing about treasury bills and bonds is that, see, you are loaning or you are lending to nation. You are lending to the government of that nation, and there is no way you can lose your money. Your money is guaranteed. So, in summary, the best investment strategy for long-term investment growth is a balanced mix of diversification, compounding, and smart asset allocation. It's not about timing the market, but time in the market. Did you hear that? It is not about timing the market, but time in the market. Always remember that consistency is key to building financial freedom in life. I hope you found this video helpful. Remember, investing is a journey, not a sprint. So I want to advise you to stay patient, stay informed, and most importantly, stay committed to your investment strategy. If you enjoyed this video, please give it a thumbs up and don't forget to subscribe for more tips on financial freedom strategies. Please, if you have not subscribed, I'm begging you again, subscribe to my YouTube channel, please. Also, feel free to share your thoughts and questions in the comment section. Thanks for watching and happy investing.